Hello, good morning to you this morning. My name is Ayodele-Bamisaiye of Dexteritas Professional Corporation, coming to you live from our offices here on Flint Road in Calgary. It's a pleasure to speak to you this morning again. This is Finance Friday, where I talk all things personal finance, entrepreneurship, and business. So, what am I talking about today? Last week we had this very interesting conversation about capital gains and losses. If you have any questions or you missed that, you can check out the post on my YouTube channel. In addition to that, today, we are going to be talking about something that is ultimately, paramountly. I wonder whether that's not the right use of that word, but something that's really, 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 really important. I can do better than four release, but that tells you how important this is. And this is documentation. Yes. Because at the end of the day, the most important part of all of this stuff that holds it all together and ensures that it stands the test of time is documentation. But before we get to that, just a few reminders here. Number one, my friends at the Financial Empowerment Initiative are on hand to support anybody of the modest income persuasion, i.e., family income of $50,000 or less. If you have not, for whatever reason, filed your tax returns for 2024, 2023, going back to maybe even as far as 2012, and you're like, how do I do this? How do I catch up? You don't know what to do. Send an email to operations@thefei.ca and somebody is going to get you an appointment that will allow you to be able to have those tax returns prepared and filed with the CRA. And once that is done, you will be able to access all the benefits that are available to you from the government of Canada, whether they are current benefits or historical benefits that you've missed out on. You will be able to access them as long as that is allowable by law if you do that. That's number one. Number two, Founders Lounge by Startup Court will be back in December. Yes, we are planning something for the 18th of December. But before then, our workshop, the Launchpad series, our workshop series for new entrepreneurs and people considering entrepreneurship is ongoing. We've had the first three sessions. The first one was a mindset of an entrepreneur. The second one was on design thinking, and then Dozier spoke to us. Dozier and one of my friends spoke to us about storytelling and presenting. Next week, Thursday, 6 days from today, David Daigle will be back talking sales, just straight up good old fashioned sales in this century, in this day and age. And that will be happening Thursday, 4th of December, 6 p.m. on Zoom. If you haven't found the details on that, you can check out either my LinkedIn profile, I posted about it, or the LinkedIn profile of Startup Court. The events party page is also live, so you can sign up for it there. But hey, just stay close by. You get the Zoom link. You can actually go to community.startupcourt.com, and there you will find the event. You can add it to your calendar. The Zoom link is already there. You'll be able to join on that day. Easy. So that's all as far as all those kind of community things are concerned. So we are talking documentation, audit-proofing your tax plan. Because at the end of the day, what we want is a tax plan that stands up to the test of time. And what is the test of any tax plan? It's an audit by the CRA, by the Canada Revenue Agency. So why is this important? Yeah. First things first, I want to point out the fact that whatever it is that you are doing as far as a tax plan is concerned, if that does not stand up to the test of a CRA audit, you might as well have not done the plan. Because a failure in the face of audit means that your plan has failed and everything that you thought you had achieved in terms of tax saving is going to be rolled back. That entire tax bill will be crystallized into your personal situation, i.e., you are going to have to pay those taxes. That's not what you want, right? I thought so. So, The biggest challenge I find, or the biggest problem that people have, is when you get that letter from the CRA, you get that call. It starts with panic, just straight up fear. Like, wow, they've written me. The world is no, no, no. The world is not coming to an end. Slow down, breathe. Because guess what? All they're asking for is information. And if you have that information and you provide it to the CRA officials requesting it, you will be just fine. The important thing is that you have the information. And how do you have the information? You prepare the documentation as the plan is being implemented. So the CRA doesn't want you to be perfect, but they want you to be reasonable. They want you to have the documentation that says, I earned $1, I spent 50 cents. Here's the support for the dollar I earned, and here's the support for the 50 cents that I spent. And what I spent it on is reasonable as far as my business is concerned. That's what they want. They're not. They may ask for every single document. It's highly unusual, but they want to see that there's consistency in the story that you're telling and the documentation that you are presenting. So, what kind of documents does the CRA care about? Number one, they care about your income records. What do I mean? They care about they want you to be able to show them your T4 slip, your T4A, your dividend slips, or invoices for services that you have provided, if that is how you earn income, right? They care about that. But more than that, they care about your expense receipts. So if you say you bought a coffee, or you say you bought gas, or you say that you made a trip, they want to see the documentation that supports all that. So all your expenses, they want to see the proof of the purchase as well as the purpose to your business. They don't want to see your bank statement. Hello, whether it's a credit card statement, a checking account statement, a savings account statement from which you made the payment, they don't care about that. What they want to see is third-party documentation that says, I flew to the US, I bought a ticket from WestJet, here is a copy of the flight ticket and the receipt that shows that I paid for it. That's what they want to see. Now, bank and credit card statements will be of paramount importance when we are looking at things like dividend income and investments and stocks and bonds and those kind of things. But from an expense perspective, they do not care about your bank statements. Investment records, definitely. So they want to see your ACB calculations. Remember last week I mentioned ACB. Those three letters go together. No, it's not an error. It's not ABC. It's ACB, and it means adjusted cost base. That's technical language for the amount you paid when you bought an asset, right? They want to see the documentation for that. If you bought a car or you bought some equipment, they want to see the documentation that shows how much you paid for it, who you paid it to, under what terms, right? Dividend summaries, definitely. If you say you got $50 in dividends, on what basis? Do you own 5 shares or 10 shares? How much dividend was paid per share? They want to know that information. Now, legal and structural documents are of utmost importance. So they want to see your incorporation documents. They want to see your minute books, your shareholder agreements, your register of shareholders, all those. You have an arrangement, trust structure in place. Those are things that are very, very critical, right, in the face of a CRA audit. So these are 5 categories of documents that the CRA is interested in. They want to see your income information, expense income information, bank information, legal documents and agreements, as well as investment records. So how do you organize this information to make it audit proof? Hey, this is 2025. As much as possible, nobody really needs to see paper documents. They will accept paper documents when you send them in by mail. But the preference is, if you have digital copies, clear, legible digital copies, that will be the preference, and that can be transmitted through your CRA account all the time, irrespective of the situation. Unless the CRA explicitly requests to come into your space to review your documentation, the first choice will always be sending your documentation in digital form. That means that if create a folder system that ensures that your documentation can be reviewed and it is complete and it is consistent, you are creating for yourself an advantage, right? Now, one thing that you can do for yourself to support this process, this folder system, is to set up apart 15 to 20 minutes every week, maybe 30 minutes at most. And during this period, all you are doing is you are looking at the documentation that you have created in your business, whether it's expense receipts, which we have lots of, or whether you signed a new contract or you got into a new agreement of sorts. Gather all those documents, scan them, and store them, whether it's in your OneDrive or your Google Drive, whatever it is that you use as a document repository. Save it there. And once you make a consistent habit of that, right, you position yourself to be able to answer any questions as regards to the finances of your business, particularly in a CRA audit situation. And even if you don't have a business, for example, you go to the dentist, that's your medical expense claim there. You're picking up you're making payments for your child care. You get a receipt on a monthly basis. That's a big claim on your personal tax return. At the end of the year, the charities you made donations to send you a slip. That's another very big contribution to your tax return. So as those documents come in through the course of the year, you keep gathering them and keeping them in the same repository. What that does for you is that at the end of the year, you just share that folder access with your accountant, and boom, they're off to the races, because every accountant loves to see that sound, clear documentation. That makes their job easier and almost guarantees you a better refund. Common triggers and how to avoid them. Yeah, because there are triggers. Claiming identical expenses every month with no receipts. You don't have any evidence. You just claim $5,000 in travel expenses every month with no basis. That's not going to work. That doesn't help you. Home office deductions with unrealistic percentages. You claim that you used 50% of your house, 60% of your house for business purposes. You're setting yourself up for very, very thorough inquiry reviews that you will not win at the end of the day. So it's stick within reasonable percentages as far as business use of home is concerned. Motor vehicle expenses that have no logs, right? You're using your car for business purposes and you're just charging the cost of the gas. That's not going to work. That's not going to stand up to the test of a CRA audit. The expectation, the standard in a CRA audit is a logbook that says, on Monday, I went to Edmonton. I drove 300 kilometers to get there for business. And then I drove 200 kilometers some other place personal. And then I drove back home 500 kilometers, of which 40% is personal and 60% is business. That is the standard for a CRA audit. So you want to make sure that that motor vehicle expense can stand up to that test when you are making that claim. Now, another one that is a huge trigger is when you make charitable donations to unregistered charities. If a charity is not registered with the CRA, they cannot issue you a tax receipt. So ensure that a charity you make donations to is registered with the CRA. That's how you will be able to make that claim properly. So, having gone through all this, I think the most critical reminder I want to leave with us is this. If you're going to stand up to the test of a CRA audit, your docs need to be in a row as far as documentation is concerned. That means income and documents relating to income, expenses, records of investments, legal agreements and contracts, as well as, what's the last one? There's one more. I must mention that one. Yes, bank statements and credit card statements also, as far as investment is concerned. All of those should be close by, easy to retrieve, easy to provide to the CRA. If you lay those docs in a row on a consistent basis, I tell you for free that you will never have a problem in a CRA audit situation, unless there's something fundamentally wrong with your plan. So, that said, Just in case you're listening to all this and you're like, what exactly is this guy talking about? I'm not exactly sure. Or you just have questions or you want to clarify something, you can shoot me a mail, dr@dexteritas.ca, or you can book an appointment to talk to me, talktome.dexteritas.ca. Yes, that's talk to me as one word, .dexteritas.ca. And I will be happy to sit with you. I have a few of those spots open actually. I'll be happy to sit with you, talk through your plan, and then put a few, if there's anything needed to change, we'll change it. If you have a great plan already, we'll just look at the documentation and ensure that everything lines up and we will get the outcome that we want. So, I think that's all I got for you this Friday morning. It's a beautiful day. Yes, it's snowing out there. It's been snowing all night. Tomorrow it's gonna get better. So I'm staying positive in my mind. I'm giving myself the option to say, hey, it's still going to be a good day. So I wish you a happy Friday. Enjoy your weekend and bye for now.